A warm welcome to everyone. And while we're still waiting for people to join or people who are currently joining, I just want to flag that you can change the language at the bottom of your screen. You will see a interpretation function at the bottom, and you can pick between English, French, and Spanish. So I suggest you do that now while we're waiting. So yeah, firstly, a very warm welcome from the ILO, the International Labour Organization, the Impact Insurance Facility here. We are very glad to be seeing you here today. And also a big thank you to our donor, the Generation Foundation, for making these sessions possible. As you would have seen in the LinkedIn posts and our newsletters, we are very proud to be co-hosting this with the Microinsurance Network, otherwise known as the MiN. And together we are doing this and earlier webinars, which I will tell you about in a moment. So to just set the context, I think it's important to take a step back and consider a little bit why we're doing this. So for many of you, you'll probably already know that inclusive insurance is very important, and it brings important coverage to those who are either un or undercovered. And we know that there is a big protection gap, especially in low-income populations, mostly in developing countries, but not only. However, let's start with something positive. If we look back since the 2010s, there have been improvements in inclusive insurance coverage. And for those of you who don't know, the Microinsurance Network tracks data relating to microinsurance network markets. And their longitudinal data shows that many more people in these targeted populations are insured than ever before. So in around the 2010s, we had roughly 150 million people covered. And this has grown to 344 million people in 2023, reflecting a huge growth in these markets. However, when you look at the statistics, the population that we're trying to cover has actually also grown at roughly the same pace, meaning that the relative global protection gap for microinsurance has narrowed less than maybe we would expect from those numbers. So just to give you the latest stat that we have, so the protection gap in microinsurance, so looking at the target market that we would say is appropriate for microinsurance, has reduced from approximately 93% in the early 2010s to 88% in 2023, which is the latest set of data used in the landscape studies. So this means that there is still a big gap. We have seen progress, but most people still remain uncovered. So this is a huge opportunity both for providers and users of inclusive insurance, with the data showing that it is possible to make big progress and also reduce this gap. So this webinar that you are joining is really important as part of a wider project to improve both the value and viability of inclusive insurance. These two things go hand in hand. If you don't have a valuable product, then it's not going to sell or be able to be distributed, and it won't be viable. So it's important to focus on these two things, and understanding and serving to understand and better serve emerging consumers. We really, that is part of the baseline of having a valuable product. So it's super important to hear what our speakers today have to say. So what ultimately we would like to see is that there are more people being covered by better solutions that enhance their financial resilience, especially considering the growing risks posed by climate change. So this webinar is part of a series. It's the fifth one in the series. If you would like to see our earlier webinars, you can visit our webpage and you'll find the earlier recordings there. And there'll be one more webinar coming after this webinar today. On our website, we also have related papers and other materials on the topics that we cover in the webinars. But for now, I'd like to hand over to my co-host and the moderator for the session, Azia. So Azia, over to you.
Thank you very much, Lisa. So yes, so today's webinar from the series Learning from the Leaders is actually, it's a great name, since we have three amazing people today with us. They're very inspiring, and they're real leaders in this scene, and especially on this topic on understanding and serving emerging customers. The I don't really want to go and read the biographies of each of them. I think you can find them all on LinkedIn, and I encourage you to connect with them directly and see what they do. But just in a very shortly, so we have Phil Smith on here, who is the managing director of the On-Off Group. He is currently based in the Philippines, and he has a very interesting experience that goes back, especially on the part of innovation and trying to find solutions on for specific markets that for people that are not covered, So he really has this experience of trying to understand what's needed and then create the product around it. And this has led him to be part of this organization now, the On-Off Group, and they support companies and organizations to really do this exercise of understanding who they're targeting. Then we have Solène Fav, who is Global Director of Inclusive Insurance at Vision Fund International. She has a very long-standing experience in inclusive insurance and predates, of course, her time in Vision Fund. But from her, if there is only one thing that you need to keep in mind as an experience and as a person, is that she's really committed and passionate about the topic, and especially everything around children and protecting children and in every aspect. On her Vision Fund work, it's incredible how they see this as protecting children is happy children, good children are in a protected household. So they see it as a macro thing. And then lastly, but of course not least, is Kevin Mutiso, who is co-founder and CEO of Oye, and he for many years has been he has a very interesting experience in creating in general, but creating solutions for people. He's a social entrepreneur and has a long experience in especially everything that's digital and digital lending, digital finance, and I don't know if someone here doesn't know Oye, I really recommend that you look it up because it's an incredible project. But that's very shortly on the speakers of today. Again, real leaders, as our title says. But then to go then to the topic, we wanted to better understand this fact that companies often claim that they are customer centric, that they do understand their clients and all their work goes around that. But the reality shows that a lot of times it's based on assumptions, that this is, that the reality is not really as you would imagine. As a short example on our landscape study, which is a study that tracks inclusive insurance around the world, one key factor that a lot of companies cannot respond is from your clients, can you give me what the percentage of women and men are? Just basic gender data. And many, like almost half the companies don't have this information, which means, they probably doesn't really know their clients. They don't really know who they're targeting. So I want to ask first, Phil, so over to you. So that many institutions, they especially the ones that are aimed at social impact, they claim that they do understand their clients and they're very customer centric, but as we know, the actual impact is then limited because they don't really know who they're serving and what their clients want. So why do you think this happens, and how do you help companies understand their clients?
Yeah, exactly. Thank you very much, Azian. Welcome, everybody. Good to be here. And yeah, to answer your question, I think for us, what it comes down to is kind of a very human trait in that we when we as humans, we come up with ideas, we often fall in love with a little bit on some level with our solutions. We think that because we had the idea, we think the ideas are great. We fall in love with them. And, it can be a new insurance product or a new digital platform or whatever solution you're coming up with. But because it's our idea, or maybe it came from the boss or whoever, we think it's a great idea. And then often we take these ideas as an organization, as a team, and we turn them into kind of big, long 2-year projects. And then at the end of the project, maybe then we kind of show things to customers later on. And we get feedback and we learn. And it can be a little bit late in the process often to get feedback because we've fallen in love with the idea. And we often forget to actually check if what we think is a good idea is a good idea for the people that we're designing for, our customers. So effectively, it's kind of talking about assumptions. And whether we're consciously thinking about it or not, we often assume that we know what people need. So there's kind of these unspoken assumptions that go around. And one thing I like to ask teams that we work with when they're working on a new product or they have a new solution or they want to build something or create something, I love asking them, what evidence do you have that this is a good solution? And often it makes them kind of reflect a little bit and go, oh, actually, well, we like it. Well, the boss likes it. But yeah, okay, but do the customers like it? And often we don't have evidence because we're so separate from our customers. And if we've just been working internally in the organization, then yeah, we're going to be lacking that. So the way we work and the way we help our clients work is in a human-centered design kind of way or a customer-centered design kind of way. We recognize that we're not designing for ourselves, but we're designing for someone else. And effectively, the first step we need to do is get out of our heads and put ourselves in the shoes of the people that we're designing for. The sooner we can do that, the sooner we can learn what's wrong with our ideas, and therefore the sooner we can improve them, iterate them, and move away from these assumptions. To kind of show you what I mean, we're going to run a very, very quick experiment on this Zoom call right now. We're going to do a quick poll. Actually, you can pop up the poll now, which is going to ask you a question. I want you to think about the best gift you ever bought for someone. And think about why did you buy that gift for that person? Like something that they really loved and they really liked. Did you buy the gift for this person because you liked it? Or did you buy the gift for the person because you thought it would be good for them, because it would solve a particular problem or a need in their life? So go ahead and click which answer you think. You bought your best gift because you liked it, or was it because it was about the person that you were designing for? Or not designing for, but buying the gift for. I don't know if we can see the results there on the screen anywhere.
Yes.
Oh, there we go. Yeah, perfect. Thank you. I see it. So yeah, 70% of people said it was for them. Sorry, I'm getting a phone call. Hang on. Okay. 70% of people bought it for them. And yeah, it wasn't about you. You were putting yourself in someone else's shoes. And you thought, okay, what does this person need? You come up with some ideas, you brainstorm ideas. And basically what we do and how you create solutions in the real world is that it's just this gift giving process, but at scale. It's putting yourself in someone else's shoes and then yeah, going from there. So it forces us to kind of stop and look at this other person and think about what they need. And very often, I think when we work with teams that are unsuccessful, we see that it's because they're not incorporating feedback from customers early enough in the process. So the human-centered design process that I'm going to talk about wraps all of that up into basically a repeatable process. And there's a few key elements that I'd like to talk about, and that I'm sure Selene and Kevin have, whether they know it or not, have been incorporating into the work that they've done. So the first element, the most important element of human-centered design is beginning with a mindset shift. So often we have in English, we have this, we've stolen this French phrase called déjà vu, where it's like I've been here before, I've had this feeling before, I've seen this situation before. And when we have this déjà vu feeling, we kind of say, yeah, I know what people need. I know what the customers want. I know what's a good solution. I don't need to look at that again. And that déjà vu thinking doesn't really help us think outside the box. So we like to jokingly flip it. So instead of déjà vu, instead of like I've already seen it, we like to call it the opposite of that, vujade. So vujade is like, okay, I've never seen this before. What if I'm seeing this problem as if I'm seeing it for the first time? I'm learning about customers as if I'm meeting them for the first time, and I'm just digging into this. So I'm pushing aside what I think I know about the problem, and I'm vujadeing it in inverted commas, and I'm learning as much as I can about the people that we're designing for. So that's kind of the first step, is to push aside our assumptions, forget what we think we know, and make sure we're finding a real problem. The second part that's useful to think about is that to recognize that coming up with a solution isn't a simple linear process from learning about a problem to the next day having the perfect solution. It doesn't work like that. In fact, it's more of a messy, squiggly kind of mess where you go 2 steps forward, 1 step back, 3 steps forward, 5 steps back, 2 steps up, 1 step down. And you're learning about this, you're iterating a lot about what makes a good idea. So you don't sit in your office and brainstorm the perfect idea. The perfect idea takes shape by showing it as soon as you can to the people that we're designing for and getting feedback and learning and all that. And a lot of that is about also embracing ambiguity, embracing uncertainty, because then at the beginning of the project, first thing is we don't know really what problem we're solving yet. So we have to go off and learn as much as we can. And then the second thing is that yeah, we're not sure what problem is. And we want to embrace that uncertainty and ambiguity. So just by getting that straight in our heads before we go on and saying, yes, look, we're gonna, when we begin this project, we're gonna go off and we don't know what we're gonna find out. So it's impossible also for us to know what a good solution could be because we haven't yet understood the problem. And to help us navigate that uncertainty and ambiguity, there's 2 different modes of thinking we can use when we're doing human-centered design or in any kind of design, divergent thinking and convergent thinking. So divergent thinking is where we go wide and we try and learn as much as we can. We embrace just learning about the people we're designing for, or we embrace generating as many ideas as we can without judging them. And then there's a separate time when we're going to use the convergent part of our brain, logical processing, analytical thinking part of our brain. So we go through this divergent and then convergent part of the brain. So we'll generate as many ideas as we can for a time, and then we'll filter down and we'll see, okay, which ideas are best, which are going to work for the people we're designing for the business, for the technology that we have, what's feasible for us to create. So divergent and convergent thinking helps us get through that. So this is really about falling in love with the problem first, and staying with the problem maybe longer than we think is right. But yeah, the more we stay with it, the better we learn. And I'm sure you're going to see that a lot from Kevin and Selene, who have been able to really dig into particular problems and look at things that maybe in a way that people haven't looked at before. And they've maybe been asking questions that people haven't asked before. Like I imagine Kevin asked, how might we provide insurance solutions to motorcycle riders in Kenya? And then they went out and they brainstormed ideas to figure that out. So Those are most of the major points I wanna talk about. But if there's one thing you take away from this idea of human-centered design being the best way to come up with solutions, is that consider that if you're not doing any research, if you're not going to customers, then what you're doing is guessing. You're just guessing. You're saying, "Oh, I don't know, maybe people need this, maybe people need that." But the sooner we can get things to our customers, the better. There's a famous quote from a guy called Jared Spool. It just says the opposite of research is guessing. And the biggest risk we all face isn't usually technical failure, but often building something that nobody wants. So I'd encourage you to stop guessing and start listening. And you don't learn this process also by hearing me talk about it in 10 minutes. You learn it by doing it and getting out there. And I think the easiest thing you could start with would be going and having a conversation with a customer, or showing them some ideas you've been working on, or even involving the customer in a brainstorming workshop. So you can immediately kind of practice that Vujade mindset, pushing aside your assumptions. Thank you very much. I hope you've kind of learned something useful. Asia, I'll pass back to you.
Thank you, Phil. So yeah, no, very interesting. And to try to understand a bit more on the field, I'd like to go to Solène, because so Vision Fund is active in all the regions in the world almost, and you have a lot of clients and you have a lot of solutions, and they are very different in each region and in specific markets. So my question here, and based on what Phil just said, is how do you make sure that you understand what the clients really need, and do not fall in the trap of the assumptions, of you assume that something works somewhere, so it should be working there as well. How do you avoid falling in that trap? And if you have a specific example of a time where an assumption, and as one of those assumptions was proven wrong by understanding clients, or by applying something like human-centered approach or something like that. Solène.
Thank you, Asia, and I hope I will not fall into the déjà vu answer here in responding to your question, Asia. So, hi everyone, happy to be here and happy to share what we are doing at Vision Fund. Just for those who don't know us, Vision Fund is a global network of 23 MFI in 23 countries, and we are the microfinance entity of World Vision, which works in nearly 100 countries worldwide. On insurance, we serve 2 million people globally. We are in all continents, as you just said, Asia. And our role as the Vision Fund insurance team is not to sell products directly. We are not an insurance company, but it's really to negotiate the best terms and conditions for our clients in each country from the local providers. So we act as a technical expert to our partners being our own MFI, but also World Vision entities, and over the last 2 years, some other MFI outside of Vision Fund network that wants to deepen clients' impact while building a sustainable and profitable insurance businesses. So our experience shows that customer-centric adaptation reduces failure, increases scale, and ultimately lowers cost per client protected. Let me explain this using a 4-step customer-centric approach. We start with one principle. We do not design insurance products from behind our desk. And I will share my screen.
Solène froze.
Conduct field surveys to understand first what are the main risks households face, how do they currently cope with those risks, and what is their willingness and their ability to pay for an insurance product. So one insight is very consistent across all markets, is that health risk is always a top priority, even in countries where there is a strong public health system. Why? most of the time because public coverage rarely absorbs transportation costs, for example, medicine or income loss while being hospitalized. And that pushes families who are already vulnerable into financial stress. Even when evidence is strong, we start simple and we test. In Rwanda, and you wanted, Asia, me to give some real example and good example here. So in Rwanda, for example, the government health insurance system is well developed. So our local Vision Fund Rwanda CEO initially believed a hospitalization cash or HospiCash product would add little value. Instead of imposing a global product, we validated with clients. So the survey that we conducted showed that health and hospitalization risk ranked among the top 3 priorities alongside life and agriculture. We therefore started cautiously launching a life insurance product, life insurance only, so we start simple, while continuing to listen our clients. So customer centricity does not stop at launch, but really to get continuous feedback from our clients. So 4 months later, what we did is we conducted a follow-up survey. Client feedback was unanimous. Illness. Can you still see?
So I don't know. I think that the slide was acting a bit crazy, so I took control.
So you will share from your screen, right?
Share from my screen.
Okay, so I just continue. So 4 months later, we conducted a follow-up survey just to see what clients are telling us. So the feedback was unanimous. Illness is still financially devastating for the families, and we need hospitalization support. Based on real demand, we upgraded the product to include HospiCash. The result is that 2 years later, we have 130,000 people covered in Rwanda and a strong uptake. So today, the same CEO, Vision Fund Rwanda CEO, is one of our strongest advocates of HospiCash in our network. So the true value is not just insurance, it's also insurance plus services. That's why, for example, in Ecuador, we run mobile clinics reaching remote mountain villages with doctors, diagnosis, and preventive care. In Bangladesh, we installed mobile booths in pharmacies to ease the access to healthcare. In all these services reduce claims, but also lower the severity and improve the client trust, making the insurance model more sustainable. Equally important, and this is also to answer your question, Azir, knowing when not to launch a product. So in Vietnam, for example, the surveys showed livestock risk was the top concern, but available products on the market in Vietnam excluded pigs, which represents 80% of household livestock. So despite a clear demand, we said no to a product that would not protect what mattered the most. So that discipline saves cost and reputational risk on the long run. And through this 4 steps approach, it allows us to learn and then to scale and to go beyond. So to answer your question directly, Asia, we ensure we offer what clients truly need by grounding decision in field evidence, testing and adapting continuously, complementing protection with practical services, and having the discipline to say no when a solution is not fit for purpose. And then when we have what we consider the best model, then we can replicate and we can grow elsewhere. So our success is measured not by how many products we deploy globally, but by how well those products fit into people's lives and help them manage the risk with dignity.
Okay. So basically the backup questions I had was because you've mentioned that through this way of working, you lower the development costs and all of that. But a lot of companies would argue that it is better to just have one product for everyone. It's much cheaper and easier to roll out. What would you respond to that?
Yeah, and indeed, it would certainly be easier for us at a global level. It simplifies the communication, makes it easier to explain our offer, and it can even be more attractive when raising funds globally for a multi-country approach, for example. One product, one message, one story. But while it may be easier for us, it would not be in the best interest of the families that we serve. At Vision Fund, our objective is not to optimize for internal simplicity, but to maximize the impact in the community level, at the community level. So for that, a country-by-country approach is absolutely key. So just an example, if we take back this Hospicash approach, the risk faced by families vary significantly from one context to another. Their access to healthcare also differs widely. The quality and also the coverage of national health schemes also differ. So in some countries, public systems cover most medical costs, but leave families exposed to indirect costs, such as transportation, as I said earlier, medicine or loss of income. And in others, it's even the access itself that is the primary challenge. So offering the same product everywhere would either duplicate what already exists, and this is not what we want. We don't want to compete with a national scheme, or leave critical gaps unaddressed. We also need to consider the local insurance landscape. So the maturity of the insurance market is important. The products that already exist on the shelf, the pricing expectations, and the willingness of insurance providers to really go beyond their standard offering. So a product that works well in one country may be unaffordable or irrelevant or simply unattractive in another country. So this is why we invest time in really understanding the local context, assessing the risk, client expectation, cultural perception also of insurance, and the ability to pay. So this requires a human and locally grounded approach, not a standardized and global template. So in practice, what may look less cost-effective at first glance often proves far more effective in the long run. So this is how we can really get a higher uptake, but also a stronger trust and better renewal rates at the end. So most importantly, they provide a real value at the moment families need it most. So this is why a single product may simplify our operations, but a tailored country-by-country approach is what allows us to stay relevant, trusted by the communities, and impactful.
And finally, you do work with a lot of partners around the world. I think mainly with World Vision, right? I think that's your main partner, but also others. How do you ensure that they also apply this, this customer-centric approach, and how much you rely on them knowing who their clients are and make sure that you're not basing this on assumptions of the partners?
Yeah, and it's not only understanding how they will be customer centric, but it's also learning a lot from them. So yeah, partnerships are really absolutely crucial for us to truly understand the needs of the customer, and this is especially true in our partnership with World Vision, as you said. And so Vision Fund is the microfinance entity of World Vision. So that's why we started with World Vision when we started to provide our technical expertise outside of Vision Fund, MFI. So we started with World Vision naturally, and then now we expand to other MFI outside of our network or other NGOs. But so really what really is key in what they can bring to us is while we at Vision Fund, we bring technical expertise in finance and insurance solution, those partners bring something equally essential, the deep and day-to-day proximity that they have with the community that we want to serve together. So the partnership play a key role in building and administering our field surveys. I told you the first step for us is really to understand the risk and how people face the risk. So organizations like World Vision are permanently present on the ground through community workers that are from the community, sometimes even health community workers, who understand local realities, language, sensitivities extremely well. So their insights help us design better questionnaire. So asking the right question in the right way to truly capture risk, behaviors, and also expectations. So they also help administer the surveys in the field, of course, which increases trust, participation, and the quality of the data that we collect. And partnership also allow us to continuously validate and refine our products. So World Vision teams, but also Al Majmoua, for example, in Lebanon, or Copperhel in Salvador, and all our partners team work closely with communities on a daily basis. So they really provide us real-time feedback on how our products are perceived and used. So this helps us quickly identify what works well, but also what is misunderstood or what we need to strengthen or to improve. And of course, where the adjustments are needed. So that feedback loop is essential to remain relevant and responsive. Yeah, so I think a good example is how World Vision has helped us understand health-related needs. Community and health workers often highlight gaps that families face beyond medical cost, and which has directly informed our approach to products like Hospicash. In the case of Al Majmoua, an MFI from Lebanon with whom we partner, it's also a strong example because Al Majmoua's close relationship with its clients and its deep understanding of how the local economy and social context have been invaluable in our process, particularly in Lebanon, a very challenging and rapidly changing environment. So their feedback helped us understand affordability constraints, client priorities, and the timing also of the risk, allowing us to adapt products and services accordingly. So partnership really help us move from assumption, so not to assume, to evidence-based, client-centered solutions. So this ensures that we don't just design products for communities, but with the communities. So thanks to all our partners, we are better equipped to listen, learn, and adapt the solution that we deliver to really make sure that we truly meet the needs of the families that we serve. So it's really a win-win situation. While we bring this technical expertise in product design, pricing, risk management, and experience across multiple countries, we combine that with their deep field knowledge. And this is how we can success together to co-create solutions that are both locally relevant and financially sustainable.
But basically, the good partnerships rely as well on shared values. No, I think all the partners you choose or you work with, you all share. You know that you share the values all together. So I think that shows in the results you have, and that's shown. So before I turn to Kevin, I just want to remind everyone that you can, if you have questions, please put them on the Q&A feature, and we'll go over them quickly afterwards if we have time. So just use that option. And then I wanted to talk to you, Kevin, because OYE is really an example, an innovative example that we at MiN we use a lot. We quote your organization. Maybe I hope we have your authorization to do it, but because it is really incredible, and it has been. You created a solution based on a demand, basically. So you really first understood what they wanted. So, I wanted to know from you, like from your early steps, how did you, what process did you follow to understand what this potential clients, or that now are clients, but at the time when you were creating this, what process did you follow to understand what exactly they wanted?
Thank you, Asier. Thank you to everyone who's spoken before and to everyone who's here in attendance. Truly an honor to be here. you've asked a great question. So the story of Oye is simple. We had a thesis that if we want to progress Africa and solve for Africa's challenges, the current narrative of having supporting SMEs is great, but there has to be the additional thing where we must build these large businesses that propel society forward. So when you look at any successful society in the world today, large businesses are, the largest taxpayers, the largest employers, the drivers of innovation, etc., etc. And so the first question, which I guess is the DNA of Oye, is using the Socratic method, asking the right question, and then, sort of using all the data available to see what path to follow. And so the first question we asked ourselves is, how do we build a billion-dollar business in Africa today? The second question was, once we figured that out, we sort of went through a lot of research, and we realized fintech would be the first lowest hanging fruit, essentially because we had large demographics that were accessing the internet for the first time. And in addition to that, there was a real underserved market for financial services, and that includes everything from credit, savings, insurance, etc. The second question was, which large demographics are large, have a homogeneous problem that we can work to solve for? And we actually looked at quite a few, civil servants, for example. We've got over nearly 1 million civil servants in Kenya, and you can imagine how many we have in Africa. Employed individuals, these are formally employed individuals. They have also special needs. Of course, you've got different segments in the informal sector. And of course, there were the women's trading groups, etc. And we kind of found that there was a lot of work happening in the informal sector around the women-led businesses, for example. But then when we looked at the boda driver, and note I'm calling them a driver, not a rider, essentially we found a demographic that, one, wasn't really liked by general society. Because of that, had been neglected almost completely in terms of financial services. And then three, earned quite a bit of money per day. So they were not a bottom of the pyramid customer per se, but they were earning at least $10 a month, which is significantly more than the average income in many parts of Africa. So we thought to ourselves, these sound like the kind of demographic we want to serve. And so at the time in 2021, there were about 1.5 million boda drivers in Kenya, maybe 20 million across the region. Today in Kenya, we have 2.5 and maybe 30 million across the region. So the next question was, what is that one problem that the boda faces that is, super unique to them? And there was one statistic that we actually experienced in real time, which is 1 in 3 accidents is boda related. What that meant, and we felt it because we had set up a focus group of about 100 bodas across different segments. And we started noticing that at some of these meetings, regular attendees were missing for one reason or another. And the biggest reason for missing was either they had been injured themselves or had gone for some kind of funeral, or we call them harambes, which is like a fundraising activity for an injured rider that they knew. And then we asked the obvious question, how many of you are using insurance? And we found that less than 2%, and that 2%, by the way, is a quote from the national government. I actually think within that specific demographic, the number is low. I just don't have the statistics to back it up. But it could be as low as 0.5%, if you ask me. because the 2% coverage is usually an aggregate number of all Kenyans. So that includes formalized employees who actually get insurance from their employer. And this is an informal segment. So it was obvious there was a huge gap. And so the question became, how do we then design a solution? And so the first thing we did is what's already available and does it work? And so we spoke to several insurance companies. One was able to offer us an existing solution, a last expense cover. And we decided to potentially, our conclusion was potentially the price of the insurance is what is the limiting factor. And Phil Smithson rightfully said assumptions, right? That was the assumption. We made an assumption based off no fact and said, probably it's price that's the sort of deterring factor. Why not sell it to them at a buy now, pay later model, or save now, pay, get it later model, which is pay 10 shillings a day. That's about 10 US cents a day. And, once you hit a certain threshold paid, you sort of get covered for the next day, or month, sorry. And what we would do is we would then buy the policy off the underwriter at $4 a year, and the difference of and then essentially if you calculate $10, 10 cents a day, 365 days a year, you get to about $32 odd, or $35. And we would make 9 times the original cost. So business model looks viable. Let's try. By day 30, we had seen a 90% drop off from our pool of riders, and that was when we thought to ourselves, potentially we had an assumption. We didn't ask the right question. It's obvious that the boda riders need insurance, but do they even want it, right? And do they understand it? And we were very fortunate to be going through a program that was initiated by FSD Africa and our regulator here in Kenya, the Insurance Regulatory Authority, known as the BIMA Lab. Because what they do is they allocate a mentor to you as a business, and that mentor essentially sort of helps you think through business problems. And they found us at this exact moment in time. So I'm sure the microinsurance ecosystem has heard of Richard Leftley. So what Richard advised us to do was, look at some models that were in Bangladesh and sort of challenged us to find a price point or something that the rider does every day where we could embed the insurance and then use the free insurance to convince the riders that insurance actually works and is useful. So we spent another amount of time looking at what bodas do every day, and we quickly realized that they have to fuel. Now, there's a caveat here. Bodas have several actors have tried selling insurance to bodas and even embedding, including our largest business, Safaricom. And all of those models have failed. And the question we asked ourselves is, why did those models fail? And we quickly realized it's because they were embedding them on digital platforms without having a human element, explaining the product to the boda driver and sort of trying to win their trust. And the way we frame it in the business is, how do you date a girl? You don't ask her to marry you on the first date. You take her out for dinner a couple of times, you buy flowers, she gets to know you, she starts liking you, she buys you something, it becomes a relationship. And so what we did was, using that sort of thinking that we need to build a relationship with the rider, is we started putting agents at the petrol station who explain the product in great detail to the rider. And the goal was to acquire the customers who bought in. And so the data has now shown 2 years in that essentially what we've done is we haven't convinced, say we have a pool of 5,000 riders in an area, but only 40% are monthly active users. That 40% of monthly active now consumes a lot more fuel at our partner petrol stations. And so what has ended up happening is we've created a very loyal customer for the petrol station, because the free insurance, once we pay out the first claims in an area, builds trust, and those that get it and become loyal customers and of the Oye loyalty point system. And then now what we're also doing is, since a lot of people know about our free personal accident cover, but the other product that's doing really well is now we have a fuel now, pay later, which is one of the things we realize is our boda drivers have very short cash cycles, and sometimes they run out of cash for fuel. And so what they will do is, if Solen wants to send a boda to pick something from home, the boda will say, do you mind sending me 100 shillings so that I can put a bit of fuel so that I then can achieve your objective? And what that does is that it creates mistrust between the customer and the boda driver. So what they would prefer is if they got paid later, because essentially they want to charge a higher premium, and so that Solen, instead of being charged 500, it probably could be charged 1,000 shillings, for example. And so there's a direct correlation with if they have fuel and the prices they can charge, the customers they can retain, etc. So essentially now they can get into one of these partner petrol stations using the Oye platform and essentially get a 5-day loan that could fill their tank. So that and a full tank could do about it's about 12 liters. 12 liters could do about 700 kilometers, and 700 kilometers could earn a boda rider maybe $150, and the total cost would be about $40 for that full tank. So we're essentially, for us, it's about asking the question, and then pulling the thread and allowing the data to take us. We don't make any assumptions. We don't have any biases. We're constantly thinking about how do we use the data to tell us. So the other theory we have is let the cake bake. It's called the cake bake theory, which is, it doesn't matter how many, how good whether you have royal eggs or special milk from the nicest cow in the world. A cake still needs about 40 minutes to bake after being mixed. All those ingredients have to be mixed in a specific way, and so you also can't rush the data. And so there's some stuff we've actually been collecting for 2 years just to confirm the consistency of our assumptions. And so we're at a very interesting point now as Oye, where the question is, how do we scale the model? We've now figured that out. And so hopefully, if you're quoting us in a year, we're not just talking about the pilot sort of experiment stuff we've done. Now we will be talking about a much larger business that's now, issuing quite a few policies and improving coverage. If we achieve our million driver target by the end of the year, we believe we could have at least 50% of those drivers covered by some form of insurance by the end of the year, which would mean we're moving the insurance coverage from 0.5% to nearly 50% in one year. And so that's the idea. I hope that makes sense. I hope I've answered your question. I hope I didn't take too much time.
Yeah, you answered the question. You answered a few things and doubts that were in the Q&A as well, because there is this thing of trust. Someone mentioned this. There is not much trust in insurance generally, and so yeah, I think there is the understanding the clients, but then ensuring that the client will understand what you're offering, right? And they can take it. So thank you very much, Kevin. This is very interesting. I really encourage everyone to find out more about this project. It is very interesting. Just a quick, if one word, very short, since we don't have much time, Kevin. This is this is a success story. It has worked. It has been working. How do you ensure that you keep up to date with your clients? That you don't assume that now it works, let's just go for it. And how are you constantly in touch with your clients to ensure the product, if the product is to be adapted, it is adapted?
Yeah, so we have several touch points. We call them channels. We've got the human, we've got the USSD channel, we've got the WhatsApp channel. We aim to communicate with our drivers at least once every 2 days by way of SMS or some kind of or message through the agent network we have, because we essentially see all our active users once every 2 days. So that's how we do it. We do a lot of surveys. We do some research projects with actual researchers who come to ask very specific questions over a period of time. That's key. I appreciate the success, what you're considering it a success. I think the key thing that keeps particularly the insurance aspect successful is the payment of claims by the underwriters. Right? This is a huge fight we've been having. In fact, that's why we moved from our previous supplier to our new partner, Britam. Essentially, our last partner wasn't paying claims on time, and was creating these very high standard for claim payments. And when you're trying to build trust within an ecosystem, if you don't pay claims, then you essentially did not meet the product promise. And why insurance works is that it's unexpected, particularly in low trust societies. We have seen customers actually cry real tears, and not one, right? When we go and we pay the claim, because they had no expectation that they would receive some kind of or sum of money at all, right? And so insurance works because we pay claims, and we pay claims on time. And we need to pay claims on time because that's usually the customer is in a very desperate situation, particularly the informal sector. So Britam is much better, obviously, but and I think that's why this is going to be a successful project, because we finally found a partner that understands what we're trying to do.
Okay, thanks. Yeah, paying claims is key and really one of the most important. I mean, it's the thing you're selling. Right? So I mean, if paying claims is what's important there. So unfortunately have run out of time. We had a few questions that are still open, I think, but you can find the recording of this webinar and in ILO's website and in our website as well. Just have a look. I'll also encourage everyone to fill the satisfaction survey that should pop up after we close the webinar, or in the follow-up email. Please do respond to that survey, because it helps us improve these types of webinars and find the right balance on what you need and what we can do. So I think that's it. I don't know, Lisa, do you have some final words you wanna say?
No, just thanks so much for joining and staying to the end.
Yes, thank you very much. Thank you all. Thank you, Kevin. Thank you, Sulen. Thank you, Phil. And I'm sure we'll.
Thanks, everyone.
Thank you, everyone.
Take care.
Bye-bye.
Thank you. Bye.
Thanks,
Bye-bye.
everyone. Have a good day, evening. Bye.
Thank you so much, everyone. Thank you for having me. Now we'll touch base on WhatsApp, I guess.
Yes,
as well.
we will. Great. Thanks, Kevin.